Right, good afternoon everybody. Steve Griffiths here, developer of the MTPredictor software program. Just while I look at the risk disclaimer, can you just let me know whether you can hear me okay and whether you can see the charts and our risk disclaimer okay as well. Right, just to remind you that all examples in this training room should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and trading purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept, losses can and will and do unfold. Doesn't matter what trading approach you do, there always will be losing trades. Right, so today I'd like to look at primarily at our Elliott wave tools in our standalone version and also in our NinjaTrader add-ons as well. But there have been a couple of questions. I can see Randolph's in the room today and Mazir's in the room today. You've asked me some questions by email, and I'll get on to those questions a bit later, a bit later in the webinar. So don't worry about that. I haven't forgotten about those questions. Right, so today I'd like to start by looking at our Elliott wave tools and a quick review of Elliott wave in general, and basically my background to it and why I've developed what I have, and basically sort of bring you up to speed on that. Haven't talked about the Elliott wave tools or Elliott wave theory for quite a while, so I thought it was about time we took a look at that. I know a lot of people don't particularly like Elliott wave because they find it very confusing and sometimes doesn't work and sometimes it's a bit of a mess, and you know, it's all just, it can be really horrible. So I would like to show you what I've done to basically simplify things. If we look at our MTPredictor website, I'll just pull that into the screen there. If you go to the resources tab, you can see here there's three sections here. There's Elliott wave theory. So this is a bit of research if you want to do in your own time as well. So here I've gone through basically the structure of all the separate waves to give an idea of what you're looking for in Elliott wave patterns. You can see they're all there. And also in the next section, underneath the section that says Elliott wave rules, there's actually two sections on this. There's basically rules and there's guidelines or general observations. So rules and guidelines, then general observations. So Elliott wave theory is quite simple as far as the rules go. There's a couple of examples, or the three examples of the main Elliott rules, waves and guidelines. For example, Elliott wave 3 cannot be the shortest completed 5-wave sequence, i.e. that wave there can't be the shortest. So it goes through and just basically shows you some quick an idea of what Elliott wave's about. Then there's the general observations. This is basically applying Elliott wave to, to the charts basically. For example, again here, the Elliott wave 3 is usually the longest, so that's what it should look like. That's usually the longest in a completed 5-wave sequence. So there's some background reading there you can do to fill yourselves in a bit more about a simplified way to do the Elliott wave stuff. This is what I've done here. I've just taken my 30-odd years of Elliott wave experience and simplified it. The most important part is this last part, where we look at the trading the Elliott wave. This is basically where I've done a bit of background myself and actually shown you why I've come to the idea of what I've done. In other words, there's a section there about enter the real world. In other words, why I think Elliott wave analysis basically falls down. Then there's the interesting one here, which is the solution that I came across. And it's basically looking at what we talk about every week in our MTPredictor analysis. In that, what I basically say here is about 50% of the time, markets are random, and then about 50% of the time, markets are basically in a clear pattern. In other words, Elliott wave theory is great. On the idea being is that if you know where you are in a pattern, you can then predict where you're going. I mean, it sounds actually great. It's like on a map. You say, right, I'm here. The map says go left, turn right, and you get your destination. That's absolutely great. But the trouble is, in the real world, and this is why I think Elliott wave basically falls down and breaks down and why it gets such a bad press, is in the real world, markets are random half the time. That's what we teach every week. In other words, half the time, the picture's unclear. So half the time, Elliott wave theory basically breaks down. In other words, it falls apart. Last little bit there on looking at our Elliott wave 3 trade setup. So, there's some information there that you can go through and have a look at just to basically get you up to speed on Elliott wave stuff if you wish. But the basic idea is what I'm looking to do is only apply Elliott wave patterns when they are clear, and more importantly, when they are clear in relation to the higher time frame charts. Now, a great example is the NQ from Friday. So this is the 3-minute NQ from Friday here. So I want to look at the Elliott wave patterns that are unfolding here and how we start to look at these. So as we do with all our analysis, the first thing we do is look to the higher time frame charts because we want somewhere where we start. In other words, the whole idea of Elliott wave theory is that you know where you are, therefore you know where you're going. But if half the time the markets are random, how do you know where to start? In other words, where do you put your pin on the map to start with to know where to start to move forward? And for that, we then go to the higher time frame charts. If you're on a 3-minute chart, you go out to the 15-minute. If you're on an hourly chart, say that's 4x, you'd go out to the 4-hourly. If you're on a daily, you'd go out to the weekly. So it's exactly the same technique as we use week in, week out with our Elliott wave, not Elliott wave, with our MTPredictor setups. So on the NQ, I just want to go, I want to go back to before Friday unfolded. So I'm just using our training mode here. Just want to go back to before Friday unfolded. So we're not worrying about any setups here, just ignore that. So as per normal, we go to our previous pivots, we right mouse click, we place our decision points on. This gives us an area of potential support and resistance. So far, exactly the same as we talk about every week. That's on the chart in advance. So what happens is if we look at the chart now, if the market then goes up to that level and then makes a meaningful reversal at that level, we then deem that at that point, the pattern starts to become clear, exactly as we teach every week with our normal setups. So the same applies to our Elliott wave patterns. So we come back down to the 3-minute chart. So here can you see the high on Friday came in right at our 15-minute DP level. Look at that, absolutely perfectly. So what we do is then we say that this is the point here where the pictures start to become clear. So in other words, this is the point where we start to look for our Elliott wave patterns. In Elliott wave theory, the initial move down to wave 1, the initial correction is a wave 2. So if I right mouse click here, do Elliott wave intermediate, you can see that our Elliott wave tool, do you see what I did there? I just hovered over the pivot, right mouse click, do Elliott wave intermediate, and that then, if there was a pattern there, it would then put that pattern on the chart. So it found a wave 2 or B. It says 2 or B because technically, this can still be a wave C down here. But we obviously know this, we'd prefer this to be a wave 2 because we're coming off an important high. After this, the next move down into here, if I right mouse click, do Elliott wave intermediate, should be a wave 3. So there we go, 1, 2, wave 3. We place our WPTs on the chart. These are the areas that are Fibonacci clusters that tells you the most likely areas of where these waves are going to end. For you guys who are familiar with our automatic setups, you can see that these are part of our targets for automatic setups. So the NQ came down, stopped basically right at the typical wave 3 WPT. I mean, that just absolutely perfect. If I clear it all off, it then made a correction up into here, which was into the wave 4 WPT. So far, so good. 1, 2, 3, 4, up into the wave 4. What tends to happen after a wave 4? Well, I go down to the low of the day here, Elliott wave intermediate, and there's a nice 5-wave sequence, 1, 2, 3, 4, 5, with the low in and around the typical wave 5 WPT. But the whole point of this is that we start using our Elliott wave tools when we get a clear pattern. In other words, when we're coming off a reversal at a higher time frame support and resistance zone. Just want to quickly go to the 15-minute chart and show you where that next low came in. There is the last main pivot low. Remember, we look at these in advance. That gave you potential support. So if I go down to the 3-minute chart, look how that then couched the decline on Friday. I find it hilarious when people get on the forums and things and they just say, oh, Elliott wave doesn't work, and therefore it's a load of rubbish. What they don't understand is that, or what they should do, is actually look at it and say, actually, Elliott wave does work, but it works some of the time. It doesn't work at other points in the time because sometimes the markets are random, therefore you can't do any kind of analysis. But when it is working, look how well some of these patterns actually unfold. But the point is that how you decide on whether to start looking at it is when you get a reversal at the higher time frame support and resistance, exactly the same as we do for our normal analysis, when the picture starts to become clear. So I just thought that was quite amazing, the way Friday we had an absolutely perfect look at an Elliott wave pattern that basically couched the whole of Friday's move absolutely perfectly. Compare that to if you just want to just click on any old pivot on a chart. Like if I go back to, say, this pivot high, if I right mouse click here and do Elliott wave intermediate, this is where people use MTPredictor incorrectly. It's because they don't understand what I've said in the last 15 minutes. Here you can see, oh, they've said, oh, it's telling me it's a 1, 2, 3. It's a wave 1, 2, 3. It's a wave 3 here. But of course, this wouldn't be valid because this starting pivot here, do you see that? That's where the sequence starts, 1, 2, 3. That is not coming off higher time frame support. In other words, it's just starting in the middle of nowhere. For example, we do it again here. It says there's an ABC, and of course that wouldn't be valid either because the start of the sequence here is not coming off an important high or low. So that is the best way to use Elliott wave, is use it in isolation. So that's why I developed this, is basically what I'm doing, and it's the whole basis of MTPredictor, is we work when the picture's clear. When the picture's not clear, which it isn't half the time, in other words, the markets are random, you do nothing. When the picture's clear, in other words, you get a reversal of a higher time frame support and resistance zone, then moving forward, you can start to do analysis or look for trade setups. But what you should not do is you should not use the Elliott wave patterns just any old where, because at this point in time, in other words, in this middle here, the market is basically random. And I mean random by not unfolding as we anticipate. In other words, there is no clear large degree trend direction. Does that make sense to everybody? And while we're doing that, it's I can hear you saying, "Oh, that's all well and good," but how can you use it to help project where things are going? Well, if I just start using our training mode here, I'll just jump back to here somewhere. And let's say you did some analysis here and you looked at this and you said, well, actually, this is a wave 2. And you want to try and get an idea, perhaps I'll go back a couple of bars. You say, oh, this is a wave 2, and you want to get some idea of where the wave 3 might end. What you can do is use our WPT, our wave price target tools. These are off here. So here you have WPTs up, WPTs down, that you can see how many clicks you make on the chart by the little pictures there, but they will then show you where these areas are then going to be out there in advance. So let's do the one for wave 3. Should click, click, click. So now can you see there it's projecting in advance where the typical wave 3 WPT might be. If I right mouse click, I can then do the risk reward manually in and around that red cell bar. And you see here now you could have a potential trade. Well, that was a lovely 18-hour trade. So do you see how we are using the Elliott waves in isolation? We're coming in and around the the higher time frame support and resistance zones, And then we can also use our WPT zones to project in advance of where markets are likely to go. We have exactly the same tools in our NinjaTrader 8 add-ons. Yeah. Hi, Wolfgang. Let's go to the NQ on NinjaTrader 8. Exactly the same here. So this is the 15-minute chart. I'll go out to that same pivot high, right mouse click, do decision point. There's the high of the day on Friday coming in. If I go down to the 3-minute chart on Friday, I'll just scroll back a bit. Just to make that a bit bigger. So exactly the same. Right mouse click over the pivot, Elliott wave intermediate. Exactly the same as we've just been showing in our end of day version or our standalone version. Exactly the same as we had there before. Here, if you want to do our WPT, we have our WPT, manual WPT up, manual WPT down. So let's do the same. Let's do a wave 5 this time. So here's the wave 5. It tells you how many clicks to do and where to do them from. You see there's your little tool tip there. So it can project in advance of where these levels are. So this is how you can use the Elliott wave patterns and also the WPTs tool, which is projecting where the likely areas are for the next wave to end in NinjaTrader 8 as well as our standalone. Yes, Wolfgang, if you're in NinjaTrader 8, our templates we use, right mouse click, templates, load, and there we have our MTPredictor template. So if you're following the E-minis, I tend to use the day session one. If you're following other markets, you can either use the 24-hour session or the default session, which takes the standard session from NinjaTrader, or if you're using Forex charts, you can use a Forex session, but you'd normally use the 24-hour session if you're following other markets. Barbara's asked a very interesting question. She says, if you haven't got a MTPredictor sell set up here, is it really worth the risk? Probably not, Barbara, if you're a more conservative trader. I mean, ideally, what you're looking for here, and if you are a conservative MTPredictor trader, you'd be looking for an ABC correction coming in here into the wave 2 to then trade the wave 3. That's what I was looking at for myself here. It didn't unfold that way. Sometimes it doesn't. Sometimes you only get a single swing correction, but that's not the purpose of this particular training. The purpose is for you guys who actually want to use the Elliott wave tools, how to actually apply them. In other words, you only apply them once you've got a clear picture. In other words, you're making a reversal of higher time frame support or resistance. Abner, if you're confused by this, don't use it. That's my advice on that. I'm just literally just doing this because I haven't done it for quite a while, and they are tools within the MTPredictor software program that if you do like Elliott wave analysis and you do want to try and do this bit more of advanced analysis yourself, you can then get into it using your tools. But if you're a more conservative and haven't had that much experience, don't try and get confused by this. So it's something you can work on and have a little look at as time goes on. But I just wanted to show you this, to show how my take on Elliott wave analysis using my isolation approach and why I do it the way I do. If I look at the history on MTPredictor, I used to do all the Elliott wave analysis like this manually. When I first created MTPredictor back in 2001, so what's that, 19 years ago now, I started with the Elliott wave patterns. I then went on to develop the automatic setups. And if you think about it, the automatic setups are, if you get an ABC correction in wave 2, which typically is the most common pattern within a wave 2, that's our TS3 and W3 wave trade setup. Our TS1 is an ABC correction to wave 2. Our TS2 is an ABC correction into wave 4. So you can see our MTPredictor TS1, 2, 3, 4 setups, including our W3 trade setups, are based in and around the wave 2, the wave 4 swings in Elliott wave theory. So this is why when we talk about our automatic setups, we're actually talking about wave 2s and wave 4s. But obviously I don't couch that in that terminology. I've tried to make things a lot more simple for you guys over the years. Mazir has asked a technical question on whether the wave 4, in other words, this one, can go into the area of wave 1. If you look on the MTPredictor website, you can say I answer that. Technically, it shouldn't, but in practicalities, it does slightly. It can do ever so slightly. So the way we've designed the tool here is this wave 4 can go into the area of wave 1, but only very slightly. Wolfgang, yes, you can use Renko charts if you wish in NinjaTrader. Yes, you can use Renko charts. Yeah, Carl has said at other points, half the time, markets are just random. So it's exactly what I was saying, is that half the time the market's random. That's why the Elliott wave theory breaks down. That's why so many people can't use it, because basically they get confused by it. What people have done over the years, bless their hearts on this, is they've developed ever more complex patterns. They've developed alternate counts. They've developed X waves, all this stuff that's made Elliott wave theory more and more and more complicated. Elliott, in his original writings, never talked about this kind of stuff. He kept things simple. He just talked about a 5-wave sequence in the direction of the trend and an ABC correction as a correction to the trend, and just kept it simple. So that's what I've done, is I've gone back to what Elliott wave did originally. In other words, I only look at 5-wave sequences and ABC corrections and only use them when they're clear, and then the rest of the time assume just the market is random. Because let's face it, if it's complicated and you're trying to do stuff that's alternate counts and X waves and all this kind of stuff, it's basically just confusing. It really is. And if it's confusing, why on earth would you want to add confusion into your analysis? There's absolutely no point. Isn't it so much better to stand aside and wait until the patterns become clear? And again, this is what I suggest you do with Elliott wave patterns. Wait until the pictures become clear, i.e. when you're making a reversal off a higher time frame support and resistance zone, and then you can start to apply your Elliott wave patterns. Exactly the same as we look at week after week after week with our automatic setups. Exactly the same. So has that been interesting for you guys to basically look a bit at our Elliott wave patterns, and in particular how you can use them by just simply right mouse click over a pivot, do Elliott wave intermediate, and if there's a Elliott wave count there, will find it, and then you can use our WPT tool for projecting the next. This is the next potential support or resistance area based on the next swing in the Elliott wave patterns. Again, this is for people who are familiar with Elliott wave and who know a bit about how to use Elliott wave in their analysis. So this is why I don't talk about this much, because the vast majority of you just simply want to use our automatic setups. Right, so hopefully that helps answer your questions. And are there any other questions on that at the moment? Or can I go and have a look at some of the other questions that Mazir and Rudolph has asked during the week? But I just thought it was absolutely amazing the way on Friday, the way we had basically the NASDAQ make the high of the day right at the 15-minute DP. It then declined down. It declined down in an absolutely perfect 5-wave sequence. You know, it's just absolutely textbook. So I just, I find it frustrating when people say, oh, they just want to just throw that away and say, oh, it doesn't work. Well, it works, but it works in isolation. That's why I developed the isolation approach to Elliott wave theory. I don't know of anyone else in the world doing this. I've done it for the last 30 odd years, and it's been in MTPredictor since 2001. So it's been around for a while, and here it is, still testing the test of time over all these years. Right, let's have a look at some automatic setups. And in particular, let's go on to Mazir's question first, because he was saying, like on yesterday, a perfect example here. Here is an example of where the market, let's look at the YM, the market gapped down. It gapped down and basically just went sideways, but it didn't gap down into any support, because if we look at the higher time frame chart, there was basically no pivot off which there's any support. There's no clear pivot to get any support. So yesterday was a day when the market was basically random. In other words, it was a day when you can't really get any clear and clean particular patterns. This is using the regular trading hours, i.e. the day session only chart. So yesterday was one of those days where you'd probably just want to stand aside. The only question Mazir was asking is, he was quite interested in looking at this W3 long trade setup. Our MTP trend was red on the day session only chart, so it wasn't one to really have a look at. But he was saying, what happens when basically you then use the 24-hour chart? Can you use the 24-hour chart rather than just our regular trading hours? So he wanted me to go to the 24-hour chart, which is, this is the same chart looking at yesterday's trading session. So what was all very, very close was there's a previous pivot low. So we do exactly the same. This is the 15-minute chart, by the way. So right mouse click, decision point. That was awfully close to coming into support there, because then if you go down to the 3-minute chart, and I scroll back to Friday, what he was looking at was, if that was support on the 24-hour chart, could we then go long on this W3 trade setup here? The only trouble with that, Mazir, is first and foremost, that one there didn't quite touch that level. It looked awfully close, but it wasn't quite there. If it had been, it would have turned this MTP trend blue, but it didn't, so it was red. If it's red, then you don't really want to be going long, because the two things are contradicting each other. In other words, it's not quite a clear, clean pattern. Can you use the 24-hour chart generally? Well, yes, because I took this screenshot after you asked that question last week. This is a screenshot of the NQ. This was on a 24-hour session. This was actually last Wednesday. So last Wednesday, it came in and around 15-minute support. If you looked at the 15-minute chart, that would have actually been reversing on the 15-minute chart. I mean, on the 3-minute chart, it wasn't clear and clean. It wasn't a brilliant setup. But overall, you had a TS3 sell with a red MTP trend. It was a wave 3 trade setup, went down into the typical wave 3 WPT for almost 13-hour profit, 12.9-hour profit. So you do get the same kind of setups, Mazir, or using the 24-hour chart if you wish to, but use the same kind of approach that we always do. In other words, you make sure that you're getting a reversal in and around the higher time frame support and resistance areas. If that makes sense. Right, got a quick question now from Randolph on the ATR, the daily ATR range, and I'll go back to NinjaTrader for this. So what this is, if I right mouse click in NinjaTrader, I come down to indicators, and it's our, where's MTPredictor? It's our ATR range, and that also goes along with our MTP opening gap, which is that one. So I'll put those two on. So it's the MTP ATR range and opening gap. I don't tend to use these myself because you see this from my analysis. What you get here is you can get two lines. These are the average range of what the market would typically move over the last 14 days. And we then take that amount. If it's down off the previous day's close, that's why I've got that there. If it's up from the previous day's close. In other words, on average, over the last 14 days, the market will have moved this much. So you can see yesterday, the market moved a lot more. It made an outside gap down. You can see that's why it tells you there, outside gap down, but it moved beyond the average range. So you know that if it's done that, it's probably not going to go much lower. There's always the exception. You can get ATR 2 and ATR 3 days, and obviously sometimes some real big days as the market's crashing, but it gives you context of where the market is, if you wish. In other words, if we look back to the previous day, there was the previous range, so it was going down to that level there. That's where the average for the last 14 days was, and it went a bit lower. So it's not a trading approach as such. It just gives you context of where you are in relation to the average move over the last 14 days. We did used to have a trading strategy where you can do a break of the opening bar, depending on whether you're inside this range or not, but I don't tend to look at that much myself. But to round off, hopefully that helps. That gives you a rough idea of what the ATR range actually is. So it gives a context or an average move of where it basically takes the daily range for the last 14 days, adds it to the close or takes it away from the close to show you roughly if the market's making the average move over the last 14 days, where it would be. So you can see yesterday we were below that. So the moves probably happened. We can have the same tools in our standalone version. They are under our high-low close section here, but I won't go into those in detail at the moment. But the range, the daily RTR range, should really only be used with a market that has a day session. In other words, it should only really be used for the USE minis. It shouldn't really be used for any other markets. Mazir, good question. He says, what time frames are you best to use if you're looking at the E-minis? Well, I tend to like using the 15-minute DPs and then look at the 3-minute for trade setups. But you look at the 5-minute as well, and perhaps if you're good, you have a very clear pattern and you're experienced, maybe then a 2-minute chart. Right, let's have a quick look at crude oil and gold. So I want to have a look at crude in particular. Here's crude oil. This is a February chart. Are we still on February or are we out to March now? We're probably out to March, aren't we? For you guys who trade crude, I don't tend to follow crude myself. I know it's an odd one, the way it rolls over. Are we looking at March contract now? Yeah, I thought it would be March. Let's have a look at the March contract. Let's go out to the higher time frame chart, weekly. There's the DP from the previous high. Do you see what I did there? Let's go back in time on crude. Let's go back a bit. If we go back a few weeks, there's the previous high. So I'll right mouse click, I'll do decision point. That gives you an area of resistance. This is on the weekly chart. If I turn off trading mode, look what crude oil's done. So if I now go down on the daily chart, look at that. Isn't that absolutely lovely? The way crude rallied up, but look where it made its reversal. Bang, right at our weekly DP resistance. What's happened since then? Well, the large trend's turned down. We've had quite a sharp decline on crude, but it's actually come right off that DP resistance area there. So if you're trading shorter time frames, you then want to be looking on the shorter time coming down there as the market started to decline. So that's very interesting to see what what crude has done there. So it declined sharply off our DP resistance area there. Right, that's really all I wanted to talk about in today's webinar. The main thing was having a look at the Elliott wave patterns and going through our Elliott wave patterns in relation to when the picture's clear. In other words, when you get higher time frame support and resistance levels. Just as a PS for days like yesterday, okay? So here you can see yesterday, it just gapped down really sharply. So when this happens, in other words, when you get a big move, particularly when you get like a big move on the previous day, very often the day following that, i.e. like yesterday, you got a big move on Friday, you get then the day afterwards, very often you just get a choppy sideways day. In other words, you get a day that expands. After it is expanded, you then tend to get the opposite. In other words, a small, narrow range day. It's what I talk about generally is that markets tend to go in cycles. And this is what most amateur traders don't understand is they look at something, they see a big move, and they think the next day you'll get another big move. But typically, it always does the opposite. There used to be a great trading strategy, I remember years ago, which used to be an NR7, in other words, a narrow range 7. So you look for markets to contract, getting the narrowest range for the last 7 days. As it got smaller and smaller, that was when it was about to then expand out and make a bigger move. So the opposite is true. After you've had a big move, then look for a day that's potentially going to be choppy and sideways. So for example, if you were looking at this particular setup here, not saying you should do because obviously it's against an MTP red trend, but if you were looking at this setup here yesterday, and let's say this was a valid trade setup, don't expect it to go right up to the typical wave 3 WPT. It may well only just go to this level here, you see, so therefore you'd want to then have a slightly closer target because it's on a day after a big day. So does that make sense? There's a little bit of a tip there from basically watching markets for the last 33 years. And this is where, you know, we use MTPredictor as a tool and why we don't use it as a black box system. Is that I want you guys to basically be able to apply the MTPredictor tools on what's most likely to happen. And I'm afraid to say that the only way to do that is basic experience. So these are the little tips I want to try and pass on over the years. Yeah, Carl, it's a few people many years ago used to do that kind of trick, but I just wanted to pass it on now, to particularly as it has relevance. And when you're trying to do some trading on a day after a big move, don't expect it to then have a second big move following on. Expect it to be a shorter, choppier, sideways, horrible day. Mazir says, oh, you got a VS short in the ES. Be very wary about VS setups that unfold just after the open. Why? Because if I go to the 24-hour chart of the ES, you'll see why. If I go forward here, oh, it's lovely how the 50-minute DP worked there. If I click on volume, this is what happens overnight. This is why I only tend to look at the day session only. Look at the volume here. The volume here is spiked up significantly as the US market's just opened. If I go back, see how low the volume is. So if you're trading on a day session only chart and the market has just opened, you'll typically get high volume. You quite often get some high volume just as the US market tends to get close to closing towards the end of the day as well. So if you get a VS setup in the first few bars of the day, even though this looks like it may be coming in quite nicely, here you go, look, there, coming in at resistance nicely, don't really trade that as a VS setup because the volume is not a legitimate high volume spike. Wolfgang, as we've said before, you do all exactly the same of techniques that I'm doing here. You can do everything exactly the same in NinjaTrader 8. So if I just use NinjaTrader 8, I'll just take these other ones off here. Where are they? Just take those ones off. NinjaTrader 7 as well. So here we go, exactly the same chart. There's your VS setup. Just redo. There we go. Exactly the same analysis as I was doing on standalone. So yeah, you can use either. I mean, our NinjaTrader stuff, whoops, there is the tools are the same in NinjaTrader as they are in our standalone version. We've done this deliberately, so there isn't really any any worry about having one tool or the other. When I do the webinar, I just have to, I have to use one of them. I can't use two of them all the time. But I just wanted to show you that we have exactly the same tools in our NinjaTrader version here as you have in the standalone version, exactly the same. Right, are there any other questions in the last couple of minutes? And hope you've enjoyed today's webinar. Hope you've enjoyed having a look at the Elliott Wave tools, because we don't talk about them very often. Have a look at how I developed my unique isolation approach to Elliott Wave. Have a look at some of the Elliott Wave tools you can use in the software if you're a bit more experienced and you like to look at Elliott Wave patterns yourself. And also just remind you that if you are using the Elliott Wave tools, you only use them when you get a reversal, a clear reversal of a clear higher time frame support and resistance area. That's the whole basis of what we do here at MTPredictor, is that we understand that markets are random half the time. Half the time nothing works, not just MTPredictor, but any kind of analysis. Half the time it's random. So there's no point trying to do any analysis or trying to do anything in that random period, because you'll just end up getting chopped to pieces and losing all the time. Isn't it far better to wait until you get a clear picture and then to do your analysis? That's what the whole idea of MTPredictor is. Okay, Wolfgang, I understand what you mean. The only data feeds we support in our standalone version is IQ feed and bar chart. So IQ feed is probably the best one. It's the one I use here. So that's the only two data feeds that are supported in our standalone version. The only reason we do that is because they're the best APIs on the market. They're the most reliable. They're the easiest to work with. They are the ones that work the best. I mean, other APIs we've found they haven't really worked that well, and therefore we don't really support them. It's basically causes more problems than not for technical support and reliability. So the best one to use is IQ feed if you want to use our standalone version. But of course, you can't do Renko charts on this, Wolfgang. The only charts we can do in our standalone version are time-based ones. So you can only work with time-based charts. So if you are looking to use Renko charts or other forms of charts, then you can't use our standalone version. You'd have to use NinjaTrader. So we only do time-based charts in our standalone version. So that's another thing to think about. Wolfgang, if there's problems with NinjaTrader 8, why didn't you go back to NinjaTrader 7? I know there's loads of people who are sticking with NinjaTrader 7 for a while because it seems to be a lot more reliable than NinjaTrader 8. Has far less problems. So use NinjaTrader 7 if you want. Anyway, drop me an email on that if you want, Wolfgang. Right, are there any other questions before I just bring the webinar to a close? I think hopefully it's been a good webinar today, and we've been talking about some other stuff, answering lots of questions. There's been some good questions coming in, so thank you to all you guys who are in the webinar today. You make it a lot more interesting for me to do the teaching when you're asking good questions, so it just makes it nice for myself and for everybody else. And hopefully you've enjoyed seeing what we'll be doing today. Right, so if there aren't any other questions, what I'll do is I'll bring today's webinar to a close. And if there are ones that you've forgotten about or I haven't had time to answer, drop me an email, steve@mtpredictor.com, and we'll see if we can get those answered in the next webinar. But otherwise, have a great trading week, everybody. And we'll come back and we'll do it all again next Tuesday.